Bank of America Securities Subramanian has a year-end S&P price target of 4,600. Joins us here at Post 9. So you're bullish. What gets us from here to 4,600, Savita, with a lot of these risks piling up?
Well, I think one of the most frequent questions we've gotten all year is, should I buy equities here or should I wait for a better entry point? So I think the idea that these dips are going to be long and sustained is harder to argue for when there's still a lot of cash sitting on the sidelines. I also think we're kind of setting ourselves up for a growth surprise next year, because if you look at the average analysts, they are forecasting the lowest sales growth and earnings growth over the next 5 years that we've seen in the history of our data. I feel like everyone's given up on everything at this point, and there's a lot of probability assigned to that negative tail risk, be it China, be it, the Fed's gone too aggressively and we're going to see everything break. There's a lot more probability assigned to negative hiccups than actually things going okay. And when I think about the market, the distribution of returns is, it's a normal or close to a normal distribution and mostly positive. And we're right now at a point where expectations are very, very low, except for these magnificent seven,
Sure.
the big companies that have crushed it over the last couple of years.
But if we get a positive growth surprise next year, and that helps earnings even, doesn't that just mean that the Fed's going to have to be maybe even tighter for even longer, and that is a headwind?
I don't know if that's a headwind, though, because if you think about it, we just wrote about a note about baby boomers, and my colleague Oh-Sung Kwon pointed out that baby boomers are sitting on $80 trillion worth of assets. They're making spread because their asset base is short duration. Their liabilities are super low mortgage, the mortgage rates that they've locked in. And they're basically buying homes for their kids. I mean, this is like another source of capital that's just sitting there generating returns. So I feel like there's a lot of attention paid to credit card delinquencies rising for millennials, but nobody pays attention to the fact that boomers are sitting on a pile of money and are still spending. Their spending trends have accelerated over the last 12 months. So I think that's kind of an interesting cross current where the real holders of wealth are actually making money on their asset base.
I mean, if you do have a persuasive case that the economy is going to hold up, I mean, the market is kind of gifting you an opportunity, it would seem, right? Because if yields are going up in large part because the economy's been better than expected, yes, higher for longer is part of that too, and supply, but the cyclical areas of the market have really gotten trounced.
Punished, yes.
And if you're the type that says, well, the market's telling us something, right? The market is gearing up for another growth scare or worse. How do you decide who's got it right?
Yeah, so I think what the market is telling us is there's a lot of skepticism about the strength of the recovery. But when you look at why the Fed is continuing to remain in, kind of a net tightening mode, it's because of the economy. So I kind of see this disconnect between why we're not buying cyclical companies with higher beta and more of a tether to the economy. What I do worry about is smaller caps, because I think that the Russell 2000, which used to be the place where you got the most economic juice, is now kind of this graveyard for companies that just can't hack it in a 5% rate environment. So I think what's interesting is that we've seen twice as many fallen angels out of the Russell 1000 into the 2000 as we've seen in a normal cycle. So that's where I think things are going to be different. You don't necessarily want to buy small caps if you think the economy is recovering. And the market is right in not necessarily rewarding smaller companies because they are more credit sensitive. But where I see the opportunities are energy, even large cap financial companies that have bolstered balance sheets, actually played a hand in bailing out the regional banks earlier this year. I think that industrials, select materials, mining companies, all the companies that have been denied capital for the last 10 years have actually gotten really lean and disciplined, are throwing off free cash. I mean, I think this is a really great setup for a lot of these deep cyclicals that are now looking a little bit safer.